Assalamualaikum viewers, welcome to our podcast series at Zamzam Capital. We hope you like our content, subscribe to our channel and do share our videos. So today's topic is the importance of savings and the Chit Fund ROSCA model. So in brief, we're going to be talking about a model that was first what savings really are, and I'm going to be talking to you about a company called Zayd Chit Funds Pvt Limited, which was run by myself from 2012 till 2023 for about 10 years plus in Bangalore, which benefited a lot of people and provided them an option to save and also get interest-free form of finance. So I'd like to share that model with you in brief, and maybe in the future, inshallah, do a more detailed presentation on that. So what are savings? Savings, when we talk about savings, we know what savings are, what we get a salary and what we put in the bank or what we keep at home, that's savings. We save it for a rainy day. But just try to understand it from an economic point of view. Your income, you could either consume it or you could save it. So C is consumption, S is savings, and I is income. I is equal to C plus S. So if you save, what you consume is gone. What you save enables you to plan for the future. You could keep it in the form of cash, or you could invest it in various assets. So that's why it's very important to save and build this habit of saving. And a very important way to save, a very important habit that enables you to save is have a form of regular saving, a monthly commitment that you put money into. Now, one thing to do is have something in the bank, which is called a recurring deposit. But that is not halal because there will be interest in it. We're talking about a context in India where all banks are interest-based. So the chit fund business, it comes in here. And chit funds also are basically not Shariah-compliant, right? The general chit fund model where you have interest built into it. Let me just explain what a chit fund is. And chit fund or chitty or chits, globally they're known as ROSCAs, ROSCA, rotating savings and credit associations. Because both savings happens and credit, you're getting a form of finance through it. They rotate. Each one of the members gets the whole saving amount, the pot, every month. So they rotate. And how the rotation happens varies. There are different models to that. And that's where a Sharia-compliant model can also be made. Most of the models that are there, pretty much all the registered chit fund companies in India. So India is one of the few countries in the world where chit funds is a regulated business. There's a Chit Funds Act 1982, which was recently modified by the parliament, that governs a chit fund business. So India, it's a formal legalized entity that's regulated by the state government in each state. So to run a registered chit fund, so only if you're registered, you could open an office, you could have a branches, you can officially collect money from the people and disburse that money to them every month. Otherwise, the vast majority of people who are doing it also are doing it from their homes or shops. That's unregulated. It's actually illegal. But since so many hundreds, thousands of people are doing it, the government turns a blind eye, and only, you realize when you can't do anything legally, you can't persecute, you can't complain to anybody if the person who runs the chits, the unregulated chits runs away, nor can the one running the chit take action on somebody who defaults because they're not running a legal business. So I ran a firm called Zayd Chit Funds that was founded in 2012. Alhamdulillah, we had a great time running it and benefited a lot of customers, primarily based in Bangalore, but we also had customers from all parts of the country and some NRI customers as well. I had to close the business down last year because of some other commitments, and also because I had to focus on my business at Zamzam Capital, and focusing on the stock market is itself a big activity, but running a chit fund business itself a full-time activity. So inshallah, maybe in the future we will go back to that business. But what I really want to do is present this model so that other people who are interested and who want to work in the field of Islamic finance can use this model in their own respective cities and towns across the country and anywhere in the world. It's a very natural activity. There are different names for the chit business in all parts of the world. I do have a chart where different countries, what the name for chit is being used over there. So that's very interesting. In all countries of the world, this is a very natural activity, form of savings where, for instance, you have a chit of 10 members, each putting 10,000 rupees a month. So 10,000 a month, 10 members, 1 lakh rupees is collected every month. And that goes to one person every month. So, that can be determined by all of them together, like, okay, this person needs it this month, that month, that month. But usually the way it's determined is you put chits or you draw lots. Okay, so every month one lot is drawn, and each one is assigned a unique token number, and that's how we used to do it. So the number that comes up that month belongs to this person, and that person will get the amount this month. So we used to take a commission for running this chit. And how our chit was halal was, we were permitted to take a commission from each subscriber because we were their agent and running this chit on their behalf. And the entire model was certified not only by our Sharia board of that company, but also by prominent madrasas, institutions in India such as Darul Uloom Deoband, Mazahirul Saharanpur, etc. So one of the conditions was that we are just an agent of the subscribers. We cannot participate in the chit ourselves. And for that, we were permitted to take a fee for running this business. Now, there is an opinion that some I've heard, particular scholar or two have said that a chit person, the company that runs chits, or a person that's running a chit business, can only take a fee equal to the actual cost of what they have spent in running this business. But our Sharia board deferred on that. And I also feel because we are an agent, we are allowed to run this as a business. Somebody who's an agent who's doing real estate business or any other business as an agent of the subscribers, they're definitely making a profit. Otherwise, they won't be doing it, right? If you're not going to make a profit. When you're talking about giving loans and taking a service fee for that, which itself is not a very good way of running. As I mentioned, loans only should be interest free. So you shouldn't really be taking any service charges, because that opens a Pandora's box. But many scholars have allowed that as long as you're only recovering the cost of providing that loan, the admin cost, etc., but not just inflating those costs to the level that you're actually paying yourself good salaries and having a fancy office, etc. So yeah, there you can't put that example to the chit fund business, is what I'm saying. Now, the regular chit fund model that exists in India is based on a discounting model where, I use the same example, 10 members pay 10,000 rupees a month, and it's a 1 lakh chit. But the one who gets it in the beginning, they're not determined by lots, but they're determined by bidding. So the one who bids the most, say 30 or 40% is a maximum bid. That means he'll get 40% less than 1 lakh. He'll get 60,000 rupees that month because he's bid the most. He's the most desperate for that money that month. Others have bid, but they didn't want to go to that level, right? So that 40% less that's deducted, that's going to be distributed among the other 9 members as interest. They call it dividend, but it's nothing but interest. And the next month, again, there's a bid. So maybe that is maxed out at 35% or 30%, whatever. So you get the flow. So those who take it at the end will actually earn some good dividend or interest income from it. So that's impermissible. It's nothing but a form of interest-based finance between the members amongst themselves. But the Islamic Sharia-compliant version is we don't have any bidding. We determine your chance of taking the chit based on the lucky draw process. As I mentioned earlier about the token system that we had, which is perfectly fine from a Sharia point of view. In fact, a lot of the Sahaba, the companions of the Prophet ﷺ, determined a lot of things based on lots. This is nothing but drawing the tokens, etc. So that in a nutshell is our chit fund model. I will be happy to do a detailed webinar format where we go through all our the entire business model. And just to show you, for instance, we even had the level of detail we went to. We had passbooks that were given to our customers where their monthly chit amounts were written. We had something like simple a day. If those who made daily payments, they entered it in this. This was our pamphlet. We had mentioned that the chit is something that you could use for the needs of your life, whether it's marriage, healthcare, buying a house, apartment, going on a vacation, buying a two-wheeler, etc. And these were a list of some of our schemes that we were running. And we had various types of documentation, which we will be happy to share. This was, while disbursing the chit amount, we made sure it was legally done. There was a promissory note. We even took guarantors, and also called as sureties, 2 to 3 guarantors. We took checks from each one of them because we had to run it in a responsible manner, make sure that the money is recovered because it belongs to all the subscribers, and they trusted us to run this business in the right manner. And alhamdulillah, we were able to do it successfully run this for over 10 years. And it's a model that we'll be happy to share for those who are interested. We look forward to your comments below. Thank you for watching this video. Do like, share, and subscribe to it again. Thank you. Assalamu alaikum.